So we've got a little more excitement with this U.S.-China trade war, trade tiff, trade dispute, trade soap opera, whatever you want to call it. And the latest headline is China weighs skipping trade talks after U.S. tariff threat. That came out this morning. So they're talking about just not having any talks, which supposedly were scheduled for the 26th and 27th of September. But on Friday, there was a report that Trump was going to continue with 200 billion in new tariffs. And then yesterday we had a confirming report from the Wall Street Journal, who you don't know whether to trust them or not, but that's the report is the report, I guess. And they're claiming that it was confirmed that they're going to have 10% tariffs announced this week. So we'll see what happens. The question is, how does this affect the market? We'll see what the futures do in a couple hours, but even then, you don't really know how things will open up tomorrow because futures could open down big. If there's not much of a reaction in Asia, then the futures could rally back. The futures could open up slightly or even big. And if there's a big sell-off in Asia overnight, then that could send the futures back the other way. So it's still very much in flux, and I think it's what makes things a little bit difficult in this environment in terms of aggressively deploying cash into new situations, because there really aren't a lot of what I would call fresh situations. That's pretty much what I intimated in the weekend report, and I think that remains the case, certainly through the weekend. So there are some things I see sitting up. I'm going to use a combination of MarketSmith and HGS Investor here. So basically what we see here, there's a couple things I see. Akamai, this thing's had a couple of breaks. It's a very classic action. Hard break on heavy volume, and then light volume that just kind of inches its way higher. And this is very sort of bizarre action to deal with, because in the past, if you saw something break that hard, what you would be looking for is a rally into the 50-day line here, say, that then rolls over. So it becomes a shortable situation because it's sort of a late stage breakout failure once it drops to this level. And it doesn't do that. You don't see stocks doing that. iWorkday is another great example of that, where you have this big break, and then it just kind of slowly works its way higher. So if you own it, for example, and you see this break, your inclination would be to just get out of the way, because it's basically a violation of the 50-day moving average, given that you closed here just below. Let me pull up my crosshairs here. Right here, you closed below the first day, below the 50-day. But as we know, violations of the 50-day moving average don't really matter anymore. They don't count for anything. And then here, this is even more classic. So then finally, you do get above the 50-day, the 10-day, and the 20-day. You're near these highs, and then boom, you break again. But the big break, which might send someone out of the stock if they bought it on the way back up, simply ends up trundling back up to the 50-day, and in more orthodox style, it fails and breaks down again. Now, one thing you'll notice here is you got an undercut and rally here, undercutting this low and then rallying through it. So that's classic too. And now the thing's kind of tightening up and settling in to the 50-day, 10-day, and the 20-day exponential moving average here. Volume was up slightly on Friday, but about average, minus 2.3% below average on Friday, and it's hanging tight in there. Possibly setting up to go higher. I suppose it could be tested that way, and using the 10-day, 20-day, or 50-day as your tight selling guide. So that's one idea that I saw. Carbon black doesn't really seem to want to get going. The places where it's best viable, undercut and rally here. White coffee and retest, very light volume as it pulls back to test the prior lows. Then it turns back up towards the highs of this range, which is becoming a low base range, and they're kind of fluttering down. Don't really see anything coherent in here, so sort of blown that one off. I've discussed it in previous video reports, but it looks to me like it ain't going anywhere, at least not for now. Salesforce, I talked about something that could be watched as a two-sided play, because you do have a base breakout here. So there's your breakout. You pull back to the top of the base here, and I talked about it last week as being potentially viable there. If it fails, of course, it turns into a short. And of course, now we've trundled back into new high ground. And you've seen similar action occurring with ServiceNow, the other names in the group, which has moved a little bit higher. That was back near its own breakout point last weekend when I talked about it, and it's trundled into new high ground. Volume has been wedging, so it's not like you're seeing heavy volume. And it's the other thing here is that you're not seeing this tremendous price movement. This thing just chopping around. It's edging slightly higher every time it makes a new high, but there's no significant upside price progress. So it's not like you're making big money with this thing. And if you are holding a stock like this, it can be a little bit frustrating, because every once in a while you get slapped around with a big volume sell-off, and that's going to throw you, but in this market, a big volume sell-off becomes a buy signal. So if we look at another name in this group, Workday, and here's another one of these situations where you have a pretty hard price break here, but then you just kind of truck right back into the highs on light volume. Then you finally do pick up some volume here, but you stall. Then you just keep going higher. It's very, very slow. And then all of a sudden, boom, right after earnings, you break down hard. But again, a high volume price break is what? A buy signal in this market. And now we're heading back to the highs. Now, the one thing I'm watching for here on this one is whether this turns into a shortable rebound after this high volume break. So I would be watching this here closely. It may become shortable if it rolls over, and then watch the other ones in the group. And of course, that's likely to work best if we see the general market start to come in. And we're up there in the major indexes, so you could see a pullback, and it could turn into 2, 3, 5%, 7%. You don't know. It could be a short pullback that creates some buying opportunities in longs that you like as they pull into areas of logical support. So, you got to be flexible here. And I think the best thing is always have some cash in your pocket by selling into strength when it gets extended, and then looking to buy back on pullbacks, because you don't really know what this market's going to throw at you. It's a little bit tricky in terms of aggressive play. I mean, if you're holding measured positions and you've been holding for a while and you have profit cushions, then you can kind of roll with the punches, and see how things play out. It's a little slower way to go. And I don't think you necessarily get huge performance that way, but it's steady. And it may be a better way to operate in an environment like this. Anyways, rails, CSX is breaking below the 20-day line. The rails have been acting well, but the others in the group, UNP, that's still holding up. It broke out a few days ago, last week, and it's going higher. Norfolk Southern is another one, and it's hanging in there pretty tight. So the rails in general look okay, but again, just very slow movement, and you're not making huge money on these things. Facebook is starting to show these very heavy bingo bars. So you have 1, 2, 3 now in the pattern, and I get very interested if I see clusters of three separate clusters of bingo bars. So in other words, you would see, say, 1 or 2, the thinner ones, and maybe 1, 2, 3 thinner ones, and then 1 thicker one here. But what you've got here are 3 thick ones. So this may indicate that the stock has reached a point where a sharp reaction rally, say up to, I mean, this could go anywhere just as far as a 20-day and die, which is what these 2 rallies did, or it could go a little further. You got the 200-day up here, and you get the 50-day up here, so there's potential for a move there. It looks like it may be short-term sold out. Volume is minus 21.9% below average on Friday, so I'm watching this one, and I guess the most concrete way to handle would be to look for a move back up through that low, which is at 16. Whoop, let me get that right here. 16656. So you'd look for a move back up through that low. And it's only about a couple of percent below, I believe. We closed Friday at 16232. So yeah, a little over 2% higher from here. So you watch that. That could trigger an undercut and rally. I would guess that that's going to occur if we see the market continue moving higher. Green dot is a pretty standard breakout. If you like breakouts, I guess it's just barely still within buying range. If the highs of the base are at 87.17 and we close at 90.93, then you're within buying range. Canada Goose is pulling into the 20-day line. Volume was running pretty light on Friday, 44% below average, and it's just in a big long base. So, we're getting back into the winter season, and these guys sell these big coats and other things that are similar, winter gear mostly. So you're coming in to the moving average confluence here. Maybe make this Bible. iRobot is a name that had a big move earlier. This one I had talked about when it was down in here. And you just get this crazy move once it gets going, and now you're basing and pulling back, and you're hanging along the 20-day line. You had volume 55% below average on Friday, so maybe this becomes viable along the 20-day. So one to keep an eye on, I think. Intuitive Surgical has been one we've been following for a while. That's breaking out to new highs. I don't consider that a viable breakout, although it is on a pocket pivot volume signature 5-day, not a 10-day, I believe. But as I've talked about before, with this stock, the place to buy it is when it sets up along the 20-day line. So that would have been a few days ago, but it's very slow mover. It's like if you go from here, we're at what? Right here, about 49, 490. So it's like a $49 stock has gone to 56 in several months. And, why do I want to own that if I can own a Roku or a Funko when it was on fire, moving to the upside? Here's Ligand Pharmaceuticals holding tight along the 20-day line. That may be setting up in a viable position based on the tightness. Lumentum I thought was interesting because I did talk about it in here, and it had this crazy move on light volume. You had a couple of 5-day pocket pivots in here, I think, and it just kind of trucked higher, and then now it's just broken apart, and now it's back at the 50-day line. So do you buy it here? I guess you could try it based on an ugly duckling pullback to the top of this range breakout here, and see if it is able to come out. The volume dried up to minus 41% below average on Friday. Live person, this one had a pocket pivot on Friday at the 10-day line. I'd probably like it better at the 20-day, but this is probably in viable range if you like the pocket pivot. You did have a breakout here. I would call that a breakout, roughly. But it's a slow mover. Again, you were down at 24 a couple of months ago, and you're now at 26, 27, and that's a slow boat to China. I've noticed the cruise lines are coming back to life. Here's Norwegian Cruise Lines hopping and bopping off of its off this 200-day moving average, but you can see it's still in this big range. Some of you might see a reverse head and shoulders in here or something like that if you squint enough, but I'm not sure if these are viable. I just noticed there was some strength in these names this past week. You can also look at Carnival Cruise. Never actually been on a cruise before. Something about getting on a big boat out in the middle of the ocean and sitting there for a week or two makes me a bit nervous. And then, of course, do they have Wi-Fi? That's always the big question. Anyways, you can see CCL right up to the 200-day line, hopping on big volume. Nutanix is interesting, mainly because you had to move back up to the highs here, and you had an undercut and rally here where you broke below this low. You're looking ugly, and then you just keep moving back up to the highs on light volume the whole way, but then you break one more time, and then you rally back up to the highs on light volume until you get closer to the highs. You pick up a 5-day pocket pivot signature, volume signature there. It's not a pocket pivot because it's nowhere near a moving average, and then you break hard after earnings, and then you continue breaking. The selling has sort of subsided, and what you have going on now, if you look at this very closely, is a undercut and rally move through this low. So if this low is, so we closed at 52.50 on Friday, and this low is 51.05. You're technically within a live undercut and rally move coming off of this low of 3 days ago. So I tried to do it once and it failed. That would have been on Tuesday and back down. Now it's sort of edging back up, and I asked myself, okay, is this going to turn into a Louis? And if we have an undercut and rally in play, then of course, that's live using the 51.05 low of this day as your selling guide. Or you could wait and see if it comes a little closer, because you did close at 52.50 on Friday, so you're up about $1.40 there. So I mean, not a huge amount. That's a little over 2%. So not terrible risk taking there if you wanted to play it at this level. But I'd rather get it as close to 51.05 as possible. And maybe if we get a pullback in the morning, you get something like that. And you have to be watching for that, even if we do sell off tomorrow on the news. And my big answer to that is who knows. This market, you can't really assume anything. You can only watch the setups in the stocks, and the leading stocks seem to hold up okay. And so when they're pulling back into areas where I can buy them, lower risk areas, then I'm willing to take a shot. End of story. I could be wrong, but that's okay. But I'm not going to assume that everything becomes a big short. Not that there haven't been some decent shorts to play, like Tesla on the downside and a few others. Here's an example of something to just be alert to. Was on Monday, this new IPO, Pinduoduo. And anybody who buys an IPO on the first day of trading or the second day of trading is just plain dumb. Sorry, but that's just the way it is, because there's no reason to. It will set up at some point, and you're better off trying to pick it off when you can identify where the lower risk areas of support are in the pattern. So in this case, what do we have right here on this day? That would have been Monday, and I saw this one on Monday night when I'm running my screens. I didn't really want to blog about it or anything because I thought this is going to be dangerous because of the situation with the Chinese names. But it hung there the next morning and was hanging in there pretty tight, so it looked okay. So you could take a position there, and then you get lucky, and the news comes out where the Wall Street Journal reports that the U.S. is inviting China to another round of trade talks, and bingo, everything launches, and this thing goes crazy. So you get more than 50% move in 1, 2, 3 days. So that's nice. It's like these pot stocks. Um, I'll get to a couple of those, but here's Planet Fitness. I've been talking about this one as it's hanging along the 20-day very tight, along the lows of this range. And now you're coming out, you get a pocket pivot move here on Friday. But I liked it at the 20-day. I think it's still probably buyable since you closed at 51.64 on Friday, and the lows of the pattern here are 49.50. So you're not, you're about 4% above the lows here. And you could buy it here using the 10-day or the 20-day as your selling guides. Regenix Bio, I talked about this one back here when I had a pocket pivot, but with all of these, I'm not going to ever buy a move like that, okay? What I will do is always look, and I don't care if it keeps going without me, that's fine. I'm just not going to get caught in something that yanks back to the downside and fakes you out, and that's exactly what happened here because you yanked below the 50-day line and you found support at the 10-day and the 20-day. So one thing I've noticed is when you have the 10 and the 20-day running below the 50-day moving average, and a stock looks like it's coming above the 50-day, but then it looks like it's failing at the 50-day, if the 10-day and the 20-day are just below, it could find support there, and that's another thing to be looking for. The other thing that's going on here that you could be aware of as you're trying to figure this out is that you did have a very tight range running along the 10-day and the 20-day here. So when it pulls back on this day, you're just coming to the top of this range, which also serves as additional support evidence or evidence of support. So, that's how you can work it that way. So the moving averages are just fuzzy zones. To me, they're not hard lines. They're very fuzzy zones, and you have to look at where the other areas of support are around a particular moving average. So if you're trying to interpret a stock's action around the 50-day moving average, then you also have to be aware of where the 10-day is and where the 20-day exponential is relative to the 50-day, where prior areas of price congestion. So in this case, you have a tight area here. That's price congestion. Where these other areas are in the chart, because a pullback that looks like it's breaking the 50-day moving average is not breaking the 10-day and the 20-day, and it's not breaking below a prior area of price congestion or support, okay? So those are ways to interpret how these things move around their moving averages, and where a dip below moving average may not necessarily be a problem, may actually be a buying opportunity, okay? Red Hat's one I talked about, and it tries to get going. I think we talked about it in here. It had a pocket pivot here, and same situation. You get a pocket pivot here. I'm not going to buy that, but you do get a pullback on lighter volume to the 50-day line. There you go. But guess what? It moves to a higher high, and boom, you get hit with another pullback to this time to the 20-day. Gets close to the 50-day, but closes above the 20-day, and now you're hanging out. This might be one to watch. I don't know. To me, it's like Akamai. It might be able to set up again and take off. But it's been under some pressure for a while. It got blasted after earnings back in June and gapped down, and it's been trying to find its feet, and it really doesn't know what it wants to do. But now it's back above the 50-day line, so this could trigger some sort of a roundabout move. So kind of a little bit out there. I don't know if I've talked about VMware, but I know I saw this on my screens earlier in the pattern when it was running tight along the 10-day and the 20-day line, as well as a 15 line, which is in there somewhere. And it's broken out. So you like to buy breakouts? There you go, although I'm not really into it. So I did talk about Funko in the report. Now, it looks pretty ugly. One thing we know about this market, though, is that when things look their ugliest, you could turn. So it's been beaten to a pulp. I mean, literally. I mean, it's such a beautifully trending stock. It goes parabolic, 8 straight days to the upside, and then you get blasted. Now, what I would be watching for here, you could, I suppose, if you're bold and brave and whatever else you need to be to buy this at the 50-day line when it's coming off on above average volume on a huge break off the peak, you could buy it, try and buy it at the 50-day line, which right now it's roughly right at the 10-week, but you could also get an undercut of any of these lows, which might be an alternative scenario in terms of a buy point. If we had, I think if we had a pull back through the 50-day line, that would get everybody really scared. And then you undercut this low here, and you could turn back to the upside. So this is one to keep an eye on because a lot of people have seen this one go crazy. We were on it very early at around $8, and I know a number of you bought it and have profited very handsomely from this. But, when everything looks perfect and the story is becoming great, I mean, I've been doing this for 28 years, and I can tell you the story is just the story. And when a story seems like it's just getting so wonderful, but yet you see the stock has a 4x move, it's 4 times almost from 8 to 31.43. That's nearly 4 times a 300% gain. You're getting a little long in the tooth, so you can start looking for reasons to sell it. And what I noticed on Mondays, you had 8 straight up days. It wasn't a typical climactic move, but when that starts to happen, you want to have your guard up because the first time they start hitting this, and you notice some news hitting the stock too, then you figure there's a lot of people who've made a lot of money, and they may suddenly all move together to bank their profits. So we will see what happens with this in the coming days, but great story, but it reached its apex this week. So, and I know last week there was a news release that Paul Allen, one of the founders of Microsoft, had taken a position in the company, 5% plus. So, that may still be a factor, but this thing at the very least needs to find a low somewhere in here. But we know how to do that using undercut and rally setup. So you know what to look for if you really want to try and play this, but I think you got to be nimble. Same thing with that pin duo I just looked at. I thought that was an interesting one to play, looking at from my own personal perspective. But for a lot of people, I don't know if you could handle something like this. You might get your head knocked off. And then someone asked me about Neo. It's a brand new IPO. Why mess with it? If it's so great, it will set up. But I really think it's silly to try and buy these things. You might get away with a trade, but that's about it because now it's pulling off on higher volume, and who knows what Chinese names will do tomorrow. And when I say who knows, I really mean that because you don't know what is going to happen. So keeps you guessing, but that's the soap opera I was talking about in the weekend report as the tariff turns. Anyways, that's all I've got for now. You guys enjoy the rest of your Sunday. We'll see what happens tomorrow. Could be a very interesting week. Take care.